What are the stocks with the highest dividend yields? Dividend yield is something that pretty much everyone is concerned with if you're in the dividend investing space. And high dividend yields obviously are going to be better than lower dividend yields, assuming that all other factors are equal. So today we're going to be looking into a couple of, or just one high yield dividend stock that I was able to look up here with Stock Rover. Today we're going to be looking at SBLK, which is Star Bulk Carriers. But before we get into it, if you don't know what dividend yield is just the annual dividend payment divided by the current stock price. So if we go over here, you can kind of get a good example of that. If we look here at Evergy, which is a pretty solid energy utility company, and go over here and look at their dividend per share in USD divided by their share price, that's 245 divided by 61.74. That'll give you 4%. So that's basically how you would calculate dividend yield. And we're looking at high yield dividend stocks. And a lot of time when you talk about high yield, we're talking about like 8%, 10%. No, these stocks that we're going to be talking about over the next couple videos are really, really high yield. Like I'm talking 25, 35%, one's even like 79% that we're going to talk about in a later video. But today we're going to be talking about SBLK. So Star Bulk Carriers is a, let me get to the Star Bulk page here. Okay, so Star Bulk is a shipping company. They basically, let's see, what do they ship? They're a Greek shipping company. They operate dry bulk vessels, capsize, Panamax, Supermax vessels. They specialize in the transportation of commodities like iron ore, coal, grain, and other bulk goods. So if we go to, who we are, we can look a little bit about what they do, a little bit about their mission and values, blah, 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 all that stuff, sustainability. But what we're really interested in are the dividend yields. So if we go over to Star Bulk, and let's look at their historical data really fast. We see that they've only been paying a dividend for the past couple years. Okay, so this is trailing 12-month data for today, April 17th. And April 15th of last year, they were paying a $4.25 dividend. This year, the trailing 12-month data is that they paid $6.50 in dividends. And as you can see, there's basically nothing before that. Now, if we drive a little bit deeper and look at their dividend yield prior to 10 years ago, so we can see that they paid a dividend back in 2020, which for some reason isn't showing up in that trailing 12-month data. And they were also paying a dividend back here in 2011 through, looks like, up to 2014. And their stock price has just plummeted since 2007, but it's remained fairly flat, hovering around, what's this, between $10 and like $25 or so, and actually has been rising recently, probably due to these dividend payouts. But that's kind of the overview of Star Bulk, who they are, what their price has been like, their dividend yield, and all that good stuff. If we go and look at their dividend policy, we can see that their current dividend policy declares that they pay a quarterly dividend in February, May, August, or November, equal to Star Bulk's total cash balance minus the product of the minimum cash balance per vessel and the number of vessels. So they have a minimum cash balance that they need to hold for each vessel. And whatever their total cash balance is at the end of the quarter, they subtract that minimum cash balance per vessel, and that's what they distribute in dividends. So we can take a look here at what their dividend amounts have been over the past few quarters. Looks like in Q4 of 2022, it was just a 60-cent dividend, $1.20 in Q3 of 2022, and you can pause the video and look through these if you'd like. But it looks like Starbulk has been doing fairly well over the past couple years because really this dividend policy is more of a performance-based dividend policy. Whatever their total cash balance is, if it's higher than what's typical for the company, then they're going to pay out more in dividends for that quarter. And that's something that we're probably going to see a lot of in this high yield dividend series, because a lot of these higher yielding dividend companies, they're not increasing their dividend quarter to quarter or year to year. It's mostly performance based. So if they have a really good year, their yields are going to go much, much higher than your J&J's or 3M or anything like that. Whereas their policies are mostly focused on dividend growth and yield over time. These companies are mostly trying to pay out based on their performance. So one thing that we definitely want to look at as far as dividends go, we see these high dividends and it's great on paper, but we want to make sure that their payout ratios are, acceptable and not just astronomical, right? So what we're going to do, I wrote a little script here to pull historical data and calculate payout ratios for different income metrics. So we have payout ratio from net income, operating cash flow, free cash flow, operating cash flow, operating income, and earnings per share. So if we type in here SBLK, make the data frame. Okay, now we can look at SBLK's historical data. So when it says 2, that's basically just a blanket payout ratio when they have negative earnings in whatever that income metric is. So these are really the values that we're going to be concerned with here over the past 2 years. So the payout ratio for net income looks like it was over 100%, 118% for this past year, only 53% in 2022. Cash flow, we see a similar trend. Free cash flow, we see a similar trend, and that's basically the story. So in 2022, the payout ratios were really low. I mean, from net income, it's only 53%, earnings about 53%, and then it pretty much almost doubled across all these different metrics, and the average ratio definitely doubled or almost doubled between 2022 and 2023. So that's something to keep an eye out on. If we go back and we look at their payouts, so in 2022, these were some pretty high dividends, right? I mean, $2 per share, $1.65, and their dividend policy is all about total cash balance instead of on their net income or on their operating cash flow or free cash flow, right? So that's just something to keep an eye out on if you do decide to buy this stock. And that's pretty much it. I mean, we can go back and look at the historical data for Starbulk again and just take a look at their income growth over the past 10 years. So if we look at net income, these first few columns are all earnings metrics, and we can see that from 2014 up to 2022 they weren't doing so high. I mean, they're in the negative territory or barely in the black, right? For net income, up until 2022 they went into the black. 2014, same story. For free cash flow, operating income per share, pretty much the same story. So I think there's a correlation here between their earnings, all of these different income metrics, and the dividends that they're paying. Their price, obviously they saw a huge decline post 2008, 2009, and have really been hovering kind of around that. Even as low as $6.13 up to $30 per share. I suspect that what they're trying to do is garner a little bit of attention with these dividends, and since they've been seeing some improved income metrics over the past 2 years, they might be trying to get a little bit of buzz, maybe see that share price pop up again, hopefully back to pre-recession levels in 2008, 2009. So that's all I've got for this one, guys. Make sure you subscribe to the channel, turn on notifications. I know that shit's really annoying, but it does help me out, so I'd greatly appreciate it if you could do that. Otherwise, I'll see y'all in the next one. Stay safe and take it easy.